Hello and welcome to Macro Mondays, brought to you by David Gokhshtein and the Gokhshtein News Network. I'm your host, Landy, and today is February 9th, 2026, and we're looking at Bitcoin here on the weekly. Let's get right into it. Bitcoin still hanging out, at least on the close here, and even a nice little retest of this 200 period exponential moving average right around $68,000. And we do have a little bit more movement to the downside for the lower second standard deviation of the Bollinger Band set here to around $65,000 to $66,000, which of course is this high right here. This was not a closing high. I think it just avoided being a closing higher high. It was a low here, 62,566, and the close came in at 62,810. So it was a swing high, but a nice close open right there on the weekly, right around the lower second standard deviation. But really, kind of the key area below the lower second is basically 65,000, which was the first high from 2021. And then, of course, that's right where this weekly came in with its high right around $65,000. And then the close open right there around the 64 to essentially 66,550 here. Between these two highs on the weekly, we have the lower second standard deviation. So if we do see price action get below the weekly 200 EMA at 68, I'd look somewhere initially around 65. If that is lost, then I would start looking back towards the low again at $60,000, and then of course 58, which is where the higher low swing came in here, right at 58.8 to 60. So we got the 200 period simple moving average there at 58 to around $60,000, and then of course that would be borne upon movement below in price action here below $65,000. If that area was lost, I'd look for continuation down to essentially anywhere between the closing low side structure here right around 55 to the lower third and 377 exponential moving average. So that's essentially $48,000 to $55,000. So that really hasn't changed at all here on the weekly for continuation to the downside. Bitcoin did get a nice buyback, as I noted, one of the previous videos before the move happened. I mentioned, we have seen knives through the EMAs here down to the SMA, and sometimes even through both. In this case, we got a nice wick through in that big sell-off through the 200 period moving average, hitting that $58,000 to $60,000 level. And actually $60,000 and $60,001 here on Coinbase spot price. Why do I use the Coinbase chart? I use the Coinbase spot price chart because all of the institutions are dealing with Coinbase institutional, and the spot chart for Coinbase is really clean. Well, let's just say the biggest institutions for the ETF side of things are utilizing Coinbase institutional, and in some cases custody services as well. So that would be continuation. It would be to look lower, right? Even if we get a swing down below, 65, then we can start entertaining moves back to 58 to 60, and then anywhere below there, we could look for essentially 48 to 55 over here on the low side of this structure. So I don't necessarily believe that that is the most likely thing to happen in terms of an extreme continuation to the downside. I think it would, if it did happen, it would turn into a wick or a swing, just like what we saw in last week's candle on the move to 60. Why do I say that? Because this is a pretty wide set of Bollinger Bands here. Now, granted, volatility is relatively low after the low was put in here with the mean reversion back to the upside while the basis band was falling, which is a 20-period simple moving average. And in this case, I would start to look for potential bounces from here, even if we do see, at least from the weekly side of things, even if we do see some downside retesting of the current low on the daily, even if we got a sweep of the lows into 58, into that 200 period simple moving average. I think we're probably looking at a bounce sooner rather than later. Now, that's just what I'm seeing on like the time frames below the weekly. That's also very true that we could see a sweep of those lows. So don't rule it out. From the weekly standpoint, though, I think that we are closer to a bounce than further from one. And again, I would be looking at any bounce from here. This is a lower low with a lower high trend reversal setup that just confirmed, right? So we had the trend reversal setup that closed back here in mid to late January. And then we got the actual play out from that move. So expansion and then retest of the lower side of the bands. Typically you see it retesting right around the lower second, but this was a pretty extreme move, which we see quite regularly in Bitcoin, which is why I pointed out in that video prior to price falling through is that don't rule out a wick below that 68 to 72 area, which is now kind of expanded to 65 to 72, with 68 being a key area right there at the 200 period exponential moving average. Again, where does this change? Where would this change from here? Well, structure changes would only occur if we see a low set, right? And then let's say this is the low. I'm not saying this will be the low. I'm saying if this is the low at 60K, a structure change would occur in one of two ways. That would be either coming right back up and taking out $98,000, right? So that would be a downtrend break, right? So break that downtrend. You've got higher highs no matter what. And then we look for higher lows or equal lows as it relates to this low here. If this low, if this were to be set as a low. The other way that you'd be looking at this, if it was going to have a chance, would be another lower high, which would be an indicator of potential continuation right below the low. But if we get a lower high and then we get a higher low that takes out that subsequent lower low, for instance, if one came in around 80,000 to 80,500, which is essentially this wick right here where the lower first standard deviation of the Bollinger Band set is, which means that we could get like a really nice sellers rally up, and then it's all about the move back down. But this would be the criteria for a structure change by breaking a downtrend if we got to move back down that was a higher, lower, equal low structure, right? Else, it is continuation, right? Then we're just looking for continuation to lower prices. If we didn't see a higher low or lower low, higher, lower, equal low, it would just be, a lower high rather to another lower low, which would be continuation of trend. And that's really, I'll be honest, that's what's favoring the bears right now is a seller's rally to a lower high and then try to go for lower lows. But as this price action develops, I'll keep you informed on what is my viewpoint on where things are. Now, right now, I am looking at this as a potential to come down in the near term from the daily, maybe even for a retest. If we start seeing price break below 68 and then just watch 65 pretty carefully. If it holds up, great. If it doesn't, probably going for a straight up retest of the low. Now, if we see 68 hold and we see 72 starting to get regained, that's where we can start looking to some of the structure over here, which we're going to look at on the daily. But I did want to cover the weekly here. It's pretty beat up, but it's in the bearish control zone. I talked about this a bit on where it was. It's now continued down to a 28 read. Of course, it got a little bit lower, but the close is coming in, back here. Let's get rid of this. Back here in 2022, we were at about, and this was not the low. This was the big initial move down into the bearish control zone. So, and I want to point this out because we need to see bullish divergence start to build off of lower lows or off of structure. This was, prior to actually breaking down to the low, which was around the 377 period exponential moving average. But this was right around that 17,000. We had the $17,000 wick or 17,650 here and then it actually painted the actual low and then rallied. Sellers rallied, chopped around, and then came back to the lows, lower high, broke down to the actual low. So it takes some time. I think this will take some time as well. I think that it would pay dividends. It's not actually going to pay you dividends because Bitcoin doesn't pay you dividends. But there's certain products built around Bitcoin that do. Some of you like them, some of you hate them. But in this case, it would pay to have a plan for accumulation, right? Not saying necessarily right here, right now, although some people are, and that's fine if it fits your plan and what it is that you would like to do. I did scale in some bids. I already had bids waiting at 65. It's been well known that I've been net short for a long time now, because long pay short in this market has been beautiful, beautiful. I'm still in that original short position that I built and then continued to build on the way down. I think it started at somewhere in the 120s when we were breaking down from 123 and rejecting after we put in the highs. And then again at 116 to 118, it tapped it twice, it failed. I was filling shorts there. And I started to hedge on the other side, right, to go net short at some of the main supports all the way up, at 100. And I've been averaging, that net short position in terms of taking profit. I did get out of the long side and then continued to use profits from that short to build out that long side again on the way down now. And I even put in some spot bids at 65. So, those didn't get fully filled. Prices moving pretty quickly on the exchanges, but it hit a good decent amount of it. But that's just one of many layered bids that I have for price as it heads down. So, and that's for the long-term hodl back, right? And I think that if you don't have a plan now, you should, right? So if price comes down, where do you feel comfortable starting that to start to bid again? And then you layer it and you increase the size on the way down. So you have to be very conscious of how you are layering your bids and the sizing of them, so that you can, track price and pull that actual entry price down as you start layering those. So I've already set mine up. I'm looking, even in some of the worst case scenarios, I have bids placed right now. So, and we're talking about like extremely low prices that are very low probability to get hit. And the question always is, well, okay, if you're doing that, what if it actually, what if this becomes the low, right? And it breaks the downtrend and goes and rips to new highs. Well, how would I play that? This is a question I get quite often on Spaces, and it's basically where if this became the low and it breaks the lower high and then comes in for a higher low, I slide my bids up to meet that higher low. And I'm willing to wait for confirmation on that higher low if that were going to be the case. Or even if it were going to be something like this where, we get another lower high, but it holds the lows or sweeps them for some equal low price action and then breaks the lower high, I'm in on that too. I'll slide those bids and readjust that position. You have to actively manage it if you're going to be doing that. Of course, this isn't financial advice. You have to figure this out for what fits your risk profile and how you would want to accumulate. But you better have a plan. If you don't, get one and make one. And then, of course, bids are layered in for continuation. And the lot sizes get bigger, the lower prices go. So that's very, very simple. You don't want to walk away and pack it in and say, I'm going to come back later. You want to pay attention when the market's in a downtrend, because that's when you can best identify opportunity and you can best manage your position. You don't want to be the guys that were waiting for, $8 to $10 or $10 to $12,000 last cycle low. You want to be able to be nimble in paying attention so that you can layer them in. And there's guys that started at 30K layering in bids. I did. You know, it was a logical place to start layering in bids. And even though my technical analysis, I had projected $15,000 to $16,000, and we split the difference at 15.5 at the time. You know, I layered my bids all the way down, and I had bids even lower just in case. Right, I wasn't really looking for much lower than $15,000 to $16,000 based on my analysis at the time, but you know, I did layer bids that were even below there. And I suggest that you think worst case scenario, where could price go? Would I be comfortable layering in my largest lot sizes down here? And then you just adjust as needed, right? As price action starts to develop and you see opportunity present itself. So I wanted to have that conversation today because I've gotten a lot of questions about it. But let's get to the daily and let's look at the weekly levels that Bitcoin's playing in right now. And that's going to be our zone 2 down here. All right. So Bitcoin is playing in the top side of the weekly structure for that $73,835 to $50,000 essentially, or $49,000. And that top side weekly structure is going to be 68 to that 73,835. Now, some of the key areas here to be aware of, it's going to be 68 to 72. So 68 to 72. If we drop 68, expect to move to that 66, 66 and a half area to around, there is a little bit of a 66 and a half to, wait a minute here. We got 66 and a half to 65 and a half. And then essentially it's down to 64 to 65. So you can really take this as one zone, but it's I'm pulling the closing to swing structure here. So it's 64 to 65 essentially. And then just above there, 65 and a half to 66 and a half or so. You can just call it 64 to 66 and a half. You don't have to split up the zone like I do here. You can consider it one node for volume and price and closing structure and swing structure. Anywhere below there, we've got a major monthly, if I remember correctly. This closed right on this weekly area as well. I believe this is a monthly. I'd have to go double check, but right around $62,800 to $63,000. That is now where the lower second standard deviation is starting to slide towards the 61.5 region. If that is lost, that's where we're looking for 58. That would be a swing of the current lows. So between $60 to $58,000. If that area is lost, we start looking down to the 55 to 56 area. And that's going to be this zone right here. Anywhere below there, we start looking 52 down to 49. I would even call out the swing at 48, where that weekly 377 EMA is, which has actually been pretty damn accurate. And in this case, back to the upside, get above that 73.835. We can turn on the prior range above, right? And it's like right on the knife's edge, right? It's like so close in terms of a gap between the retest and then the failure, right? Where we went in for the retest all the way back over here of this big zone here between that 68 to 73.835, almost 74. We had the 74.4 here on the bottom side of this weekly. And for structure right here, this 74 to 76.5, and then 76 to 78, and then we see the basis band is right above there, just shy of 80,000. Beware of swings to 80,000 that fail and come right back down. If that was broken above, then we can start looking, 83.5 to 85, essentially where the 55 EMA is on the daily. Now, I would say watch the lower term timeframes, because after a big move like this, if we look at something like a 4-hour, you can see it's in a consolidation as it relates to this weekly. So it's consolidating inside of this weekly, even tapped perfectly the bottom side of the weekly there at 68. Of course, that is the weekly 200 period exponential moving average right there at right around 68. That was the retest that we got on the 4-hour candle at the beginning of this weekly candle. And then it worked its way back into this interior zone between the closes there, right around 69.5, 69.7 to around 71.3. If we do start seeing this break out above the upper second on like a 4-hour and above that 72.2 region, it would have to meet the criteria of breaking above the upper second and 72.2 or so to go and test, essentially 73 and a half to $74,000, and maybe even in for a retest up here around 75,000. That's where I'd be looking for expansion into pretty heavy resistance. Can it rally above there? Absolutely. If it starts to break down below 68.2, so essentially 72.2, look up towards that 73.5 to 74 and above to 75. If we get a break below 68.2, it can swing down into, 67, 67.3, but realistically that would be expansion into like that 67.5 to 64 kind of weekly zone, these two big weekly zones, kind of bracketing around $65,000. Continuation below there for the 4-hour, down to the 62 to 8 to 63, and then of course 61.5, and then 58 to 60 by the low. I would pay close attention to it. 4-hour in a compression like this is going to tell the story moving into something like a 12-hour. And you do need to be aware of 12-hour. This is downside expansion. So anything even back above the basis can come up and tap that upper first. And that's a bearish retest. You can see upper first is right around 76.9 to 77. But this is likely going to continue down the longer that Bitcoin stays here and consolidates. We are starting to get the lower bands starting to wrap back up. So there is the possibility of hitting those low 60s. And right around that weekly where we got the close open here at 62.7, 63,000 by that lower second, it would be continuation. If we saw a close inside of this weekly zone down here, especially below 61.5, going for that 60 to 58 by the lower third. Back above the basis, of course, that's where we would see a test towards that 74, try to go up for 75, and maybe even try to push further than that. That would be pretty interesting to see something like that. Be aware that it would be a setup for a rejection or a bearish retest from the look of the bands, even on 12-hour daily, so on and so forth. So watch that 4-hour. It's in a compression. We're likely going to see expansion soon. So whether it happens to the upside, watch 72 to 72.2, it's probably going to get expansion up. If you see 68.2 dropped, we're probably going to start seeing expansion down. And when I do say dropped, or when I'm talking about the criteria for this, I'm not talking about wicks, I'm talking about closes. Closes are what initiate expansion or of volatility. So that's pretty much all I got for today regarding Bitcoin. We're going to look at a few other things and we're going to wrap this up. And I want it to be as long as some of the other ones have been lately. I know we've had a lot to talk about though. Let's look at commodities. Gold back above 5K. This is a nice structure right now in terms of a higher low in place. We need to see the lower high on gold taken out. And I'll just mark that really quick here. That would beget moves to kind of what I was talking about before. So above around 5,100. For gold, I'd need to see actually 5150 or so. Nice. It's a little crazy, a little insane. 5160 here. Taken out on a close. If we hadn't already seen gold make a big move back to the highs, I'd be looking for, 5250, somewhere splitting the difference between the upper first and upper second as it's set up in a range, to around 54. If it does start to break above there, pay close attention to 54.20, which is the closing highs. Anywhere above there, I would start to look, 54.50. I'd start to look right back to the highs, essentially 55 to 5600 again. If we start to see closes above the upper second, which is right around 5400, that also meet the criteria of daily close above 56, we're moving up in an expansive fashion. And we'd likely see the upper third start to twist up towards 57, 58, and then towards 6K. But if we see the low dropped by the lower first here at 46.55, if we started to see that, look back to 45.50 or so, and if we see 4,500 dropped by that 2414 on a close, you can start looking back to the mid 4,500 area and possibly down to 4K again, starting to come back in towards the low side structure and the low 4K region, and possibly even going for a swing around $4,000 an ounce. So silver, a bit of a different look. Criteria is that it breaks the downtrend. That downtrend is going to be at 92.19, and it needs to hold the low right around $64. So it can get a structure change with a trend break above 92, and then it gives the opportunity for 95 all the way up to you've got 95 to 96, and then above there about 100 to 104, 105 region up here by the upper first. If it starts to get above there, I'd look for a run right back to the highs. I would take it like $5 at a time, 110 to like 115, 116 by the highs. Cracks above there, we'd be looking, back into the 120s by the high here, all the way up to potentially 130. If it does roll over here and lose right around 78, if it loses 78, look back to 74 to 75, and then it's right back into that $70 region. If it loses that, then we're retesting the low, mid 60s to 70. So this low side structure right here. If that was lost, we're probably looking for this thing to come back down. That's also where the 100 EMA and lower second is, right there in the mid 60s to $70 area, right at around 67.80 or so. If that's lost, it's probably going to go for that mid 60s retest, potentially more down to the $55 region. That would be expansion to the downside. This is set up in a range, so I would expect both gold and silver to probably try to consolidate, to be quite honest. I did want to check on oil because it's chopping around a pretty important area. It did swing this high side structure over here at 66.42 and hit 66.50 essentially. That's also a 377. Came back down to the 200s here and is trying to balance on them on a close. And if it loses it, I'd look back to $60, to be quite honest. Otherwise, I'd look right back to the highs, trying to break out above 66.50 to try and run somewhere around 68 to $70 by the upper third standard deviation up here. Natural gas has now gotten even lower down to this low, so kind of what we were expecting, but it's a big range. It could go even lower. It's going to be weather dependent here in the U.S., but we could look at 290 as a possible sweep area. But if it holds up right here around the $3 region, all it's got to do is take out the 365, and then I'd be looking 390 to $4 again, and potentially more if it starts to get if we have like bad weather up to like 450, even $5. It can be very violent in the way that it moves, so just pay close attention. Now Dow, I wanted to talk about Dow for just a moment. So I mentioned with Hotep Jesus on Friday that I'm looking at Dow as a Main Street's back. Why? Why would I look at the largest mega caps on the planet and say Main Street's back? Because of the rotation. We saw tech, as I described when him and I were talking, we saw tech selling off, right? But then we saw Dow going up, and tech was leading Dow, right? The higher stock prices get the bigger multiple, they lead Dow to the upside. But what we've seen is a rotation from what is considered low impact on Main Street to high impact on Main Street. And this is being borne out in some data that came out last week for PMI manufacturing, where what we're seeing is a rotation to the boring stuff, right? Your Caterpillars, your Honeywells, your Home Depots, your Walmarts, and stuff like that. The boring stuff. Well, why is it? Why would I ever look at a mega cap corporations and say mainstream's back when this is all Wall Street plays. The main reason why is because that rotation is significant when you see that capex expenditure for those companies is typically going to be on the production, so getting product in and employees, right? So they get a lot of stuff from, especially in the manufacturing industry here in the United States with the tariffs. We're seeing a lot more manufacturing, the manufacturing base starting to come back. We're actually seeing this borne out in actual manufacturing numbers as well, with the largest increase in PMI. I wanted to point that out here with the ISM manufacturing PMI. So we saw one of the biggest moves that we've seen in a long time. And I figured it might be good to go and show this. This is a significant move. This tells us that the Trump administration's focus on rebuilding the manufacturing capacity of the United States is actually working. And we went from a 48 read to a 52.6. This is a pretty big jump. So we're looking at a 4.7 percentage point increase, which is pretty significant when we were at 47.9% to 52.6. That means that what they're doing is working, and a lot of that is going to be borne out through incentives, right? That's the incentives that are being set up through the One Big Beautiful Bill. There's also incentives hitting from the Build Back Better plan as well this year. There's a few others. They chopped a lot at some of the prior administration stuff, but they kept in a lot of the stuff that was, they kept in more than you might think in terms of this prior spending. So a lot of it's hitting this year, and a lot of the tax incentives and a lot of the money from foreign investors that he has touted is starting to come in the planning phase for some of these larger projects. You've got smaller companies here in the U.S., some that are listed, some that are micro caps or small caps, that are starting to actually see the benefit of that. How can you gut check that? Well, you can go and look at the Russell. So you can go look at the Russell 2000. This is in a nice weekly recovery back to the upside as well. Also making, not new all-time highs, but making new closing highs. Dow making the new all-time highs, obviously, with the mega caps. So, but when I said that, is like what they're doing is Main Street is starting to come back, right? And it's not back. I may have been a little facetious when saying that, but it is starting to come back. We're starting to see some of the economic policy starting to work its way through the actual mega caps and micro caps, and then smaller businesses, privately owned businesses, right? So, private companies, not public companies. And it's regional. So we are starting to see things starting to move. And I think that it's probably going to take about 6 months to really see that move. And if we continue to see the rotation into what you might consider risk off or boring plays, I think that that we're going to see a lot of it reflected in the economic data. So we'll see it reflected here. And here's the more interesting part that I found particularly interesting. We'll see how this tracks month to month, but we'll start checking on this a little bit more. But if we look at pricing, it's actually the same chart. I don't know why I reopened it. Pricing. We're going to be looking for, okay, prices. Prices Q1 to Q2 of 2025 in through the end of Q2 were fairly high, and they've come down and kind of stabilized and are going sideways. If we look at the last couple of reads for pricing, 63 in September, 61, 58, 58, 58. So we're kind of stabilizing and coming down in terms of pricing while expanding in the manufacturing numbers. So in terms of new orders, production, employment starting to come back up after a little bit of a rounded bottom there. Supplier deliveries are back up, kind of chopping. Inventories are starting to creep back up. Customer inventories, though, down. So this would be, this tells you the two industries that are reporting that they're inventories are too high would be your plastic and rubber, and then electrical equipment and appliances and components. Some of this stuff, we'll see what happens with some of this manufacturing stuff in terms of exports too. But for the most part, everything is winding up, and we're starting to see that with the rotation to risk off, and capex that is actually, the capex for some of these companies that had this larger shift in Dow. They spend money on product and inventory and employment, and it's a higher impact on Main Street, and it's also has a higher impact on smaller businesses. And then you have tech, which is really a low impact on Main Street. So that's one of the reasons why I was talking about that. But Dow could easily come up to 50,700, as long as it's holding the low here at 48.5, 48.4 or so. If it's holding that, up and to the right is the name of the game from a weekly. We'll check on dailies next week. We had a nice buyback. This is a big compression. I mentioned on Friday with Hotep that, what we have to watch for is, and what's giving me pause for a potential rollover in NASDAQ, is that we got a nice buyback. We're in a compression. Dow is going on to make new all-time highs. And I mean, the rotation could lead to a full rollover, but you'd end up seeing that in Dow being pulled down too. We had a nice buyback in a lot of tech stocks as well. But if it drops 24.5, 24.50, expect a lower second standard deviation to get hit and likely a run for 24K. Anywhere below there, this is a rollover with expansion to the downside, likely looking at 23.5 to 23, and then under, like probably pretty significantly over time. But Dow and Russell and some of the manufacturing stuff is giving me pause there for expecting a rollover. And, we are looking at the potential top formation if that were to happen in SPY as well. But SPY recovered and went right back and hit the highs. So, with Dow giving me pause there, I think there's a chance that NASDAQ gets a nice move back to the upside too, or maybe chops around the highs here. If we do see anywhere, any kind of closes back above this 695 area here, 696, especially at the highs here around, I'd be looking 698 to 700 or low 700s in this case. Upper second is right around that 703 to 705. So again, still same general area initially to the upside to that 705. And then I would take it, 5 points at a time, 710 to 715. We've got the upper third right there by 716. If we started getting above there, we're looking for probably a very big move to the upside. It's all going to be contingent on holding the lows around 676 to 675 where the swing is here. If that is dropped, then I'm looking 670 and then down to fill out this daily area right here that was deviated around 660, potentially down further. Anywhere below 665, this is a confirmed rollover with expansion. We would know this based on a technical breakdown below around 675, and then starting to really work its way down and rejecting any kind of upside moves. It would still have to drop around 655 and the low here at 650 to really get that expansion. So it would still have a chance to save itself from a full-on rollover, but I don't think that's what we're seeing. And we'll just have to kind of track how things are going. 24.5 to the downside I'd watch. Otherwise, it's looking like it just wants to kind of bounce around in a range. To the upside for NASDAQ, by the way, 25.8 or so around the highs here is the upper first. Anywhere above there, look right back to this wick high again that swept the highs. This is actually the danger. This is what I don't like. We swept the highs and then got a lower high close for that high back in late January. This is where it kind of makes me, the highest close here did beat out the other high close, but we did not get above any of the swing here at 25,835. We even swung right up to the opening all-time high, not the actual swing high, but the opening all-time high just above 26K at 26,132, and then close below. This is usually bull bait, and it usually sells off or rolls from here. But again, I just don't, because of the rotation and the fact that we're seeing such a nice buyback in high impact stocks that are affecting Dow and having it just kind of going sideways and up. And then Russell looking pretty strong here with another higher low at 2570 or so. Yeah, just give it time. Watch it for the rest of this week, see how things go. And then we'll revisit this on Wednesday for the Wednesday check-in. And yeah, I hope you all had a wonderful weekend. I hope you all had a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. With all that being said, Landy out. Take care. Talk to you Wednesday.